Hey everybody, this is Jose Blasco. We are about to get started in just a few seconds. This is a sound check as we are getting ready to get started. The way to do it is you just type a quick hello on the chat box, and that way I know you heard me say that, so we know sound is good, and I know you're ready to begin. We got 10 seconds to go. I would appreciate those hellos on the chat box so we can start on time. Thank you so much, everybody. Almost time. And actually, we just hit the top of the hour, so it's time to begin. Welcome, everybody. Official welcome to the session. Today is November 14, 2022. My name is Jose Blasco. You can see my email address on the screen as well. Welcome to our multi-asset CFD trading live session in partnership with City Index. Always great to team up with great partners. In this case, a fantastic broker to trade CFDs. On the bottom part of the screen, you can see the URL that you would want to use if you want to find out more about CFD trading, or how City Index work when it comes to type of accounts, etc., etc. So please feel free to use that link and go take a look. And in today's session, we're going to be looking at obviously CFD markets and plan on real-time trades during market hours, so we can get ready to seize the opportunities as long as they're available, and most importantly, they meet our rules, because as traders, we need to be disciplined, we need to follow rules that keep our emotions under control, rules that add statistics or odds to the probability of our trades. And again, I'm going to be discussing all of this one at a time as we go through the markets. Okay, I'm starting the session with not too much rush, as I'm making a little bit of time for more of you to connect. In the meantime, as we're getting ready to get started, I am highlighting on the upper left side of the screen our financial disclaimers. Please read them carefully because it is important information. I guess we all understand that trading or investing carries with it financial risk, but often while we all understand, especially if you're new to trading, you may not have really thought about what that means. So again, it's very important that you understand the content of our disclaimer, and therefore I am highlighting it with no rush for you, so you have time to read it, and I am counting on you all for sure to read it completely, because that would be required to continue with the session. Anyway, the session is about going through multi-assets in the form of CFDs and prepare trading opportunities to be used for long-term investing, for intermediate-term trading, for, let's call it short-term trading, all the way to intraday trading. So we're going to be looking at the market from different angles, from different time frames, and looking for opportunities that hopefully accommodate to everyone attending the sessions. So feel free, even though you can see on the agenda, the last item is Q&A, just feel free to ask questions anytime during the session. That would be great, so we can make the session more interactive, including the fact that maybe you have curiosity of checking some specific markets. Maybe you want to look at share CFDs, right? And maybe you are interested in, so Jose, what do you think about the Microsoft CFD? How do we analyze that market? How do we plan a trade on Microsoft? Or what about Tesla, or you name it, right? So again, if there are specific ticker symbols you would like me to explore and get back to you on my approach to trading for those ticker symbols, and hopefully this helps you when it comes to developing your own skill. So please feel free to type that on the chat box, okay? So everybody, or I should say no one, please, no one is to be shy in our sessions, because this is about teaming up, this is about teamwork. Thank you so much for that, Jeff. This is about getting together, working together to developing our skill together. Anyway, what else? Well, I mentioned that the session is run in partnership with City Index. And talking about City Index, which you probably know is a very, very reputable broker for CFD trading. They are a fantastic brokerage house, to be honest, and there are many reasons for that. One of them is that they are under the umbrella of the Stonex Group, which is the largest FCM in the world. So of course that is very relevant for me to say and for this to be, right? So that's a great thing. But apart from that, if you look at their websites, and specifically if you use the QR codes that I have on the screen at this moment in time, you will see that first of all, as a City Index client, you have access to a series of rewards and benefits. nice, let's call it perks, okay, even though it's beyond perks. Go take a look and you'll see what I mean. And then more specifically in the world of knockout options, and by the way, if you don't know what knockout options are, I will explain that in a moment, but there is a great opportunity as well for you to open an account, fund an account, I believe it's with $2,000, and then that promotion is unlocked for you, and then you get $200 of cash back, I believe after 1 or 2 trades. So go take a look at those links, and that will certainly help you to understand better those promotions, and then you could certainly connect with City Index. They have all sort of contact us ways on how to get in touch with them, or if you want to shoot an email to me, I can certainly get you in touch with the team as well. Okay, Jeff, to scan the QR code, to be honest, there are many ways on how to do it. You can either download a QR code app on your phone and then you use it to scan, or you may use your photo camera, right? And depending if you're using an Android phone, an Apple phone, etc. So with when you point at the QR code with a camera, your phone will identify it's not a picture, it's a QR code, and automatically it will give you the link. Okay. If you were not to be able to accomplish that during our session, because I need now to move into real-time charts and start beginning with the trades, you can certainly shoot me an email, Jeff, and I will point at the right direction for you. Okay, not a problem. Wonderful. So everyone, let's get started. I'm just gonna minimize the introduction slide, and here we go. So first of all, let's get organized. Okay, that was item number 1 in our slide. So the first thing was to get organized, and getting organized means that we're gonna be trading multiple markets. I'm gonna be looking at equity indices in the US, outside of the US. We're going to look at markets such as crude oil. We're going to look at currencies. Again, if you type ticker symbols, you're interested, and you ask me to look at specific stocks, could be stocks in Singapore, could be stocks in the US, you name it, for sure, I'm happy to do that, and I'll be working with you on that, okay? But all of this implies to have access to charting software and access to market data. So how can you do that? Well, there are a few ways on how to do this. Okay, first of all, if I bring this other screen to the main screen, you can see here on the upper left, we got City Index, right? So what is that? Well, that thing is the web trader, right? So if you go to cityindex.com.sg, right, and you come in here and you open an account, then you can come in here, log in, and the moment you log in, you basically come to this place, which is your web trader, which is the tool that you could use to place your orders. Now, not only place your orders, you can actually also look at specific charts. So for example, if I came to browse markets and I said, okay, look, I want to trade the Aussie US dollar, and you selected it from the list. Notice how on the right, you get a chart. Okay, and from here, you can do your market analysis. You can place your orders. You can also select the option Market 360. This will open a new tab for that market only, where on the right you can have news, on the left you can have specific information related to that market itself, such as the trading hours, or the margin required to trade this market, things of that sort. And then you have a bigger size chart where you can do all your drawing, all your market analysis, and so on. So this is one way to approach your trading using City Index, which is to use a web trader. But to be honest, there is another way on how to do it, which in my mind, it's more powerful because you are unlocking more analytics power, and that is using another platform, not the web trader, but using another platform called TradingView, which is probably known by many of you. And if it's not known by many of you, I'll explain in a moment how you can get it. But basically, the moment you get TradingView on the screen, it looks like that. And I will explain in a moment how to get it, but notice that on the bottom part here, which you may not see because we have that ticker on the bottom part of the screen. So let me move this up so you can see it. Here we go. Now you can see it. So on the bottom part, we got the trading panel. And if you click on that, okay, I just unclick it. So if you click on that, so basically you get a list of brokers. City Index is there, and you can click and connect. And then if you have an account with them already, of course, if you don't have an account, you cannot do it. But if you have an account with them already, so now you can come in here, click connect, and the moment you click connect with your username and password, which is the username and password for CT index. Notice that now that here it says CT index, green light, and that means that you are connected live to your CT index account, even though the software I got in front of us on the screen right now, it's not the CT index platform, it is not WebTrader. That software is TradingView, but it is now connected to CT index. And the moment it's connected, notice how cool is this. If you type Microsoft, for example, because you want to trade Microsoft CFDs, well, notice what's happening here on the right. So you have CT index, okay, that will not be there unless you connect it to the account. And now that's a stock, so you can select stock. And when you select stock and you check mark CT index, notice that instead of a long list of stocks, which are Microsoft trading in London, Microsoft trading in Milan, Microsoft trading in the Mexican Bolsa, instead of all those other markets, now you are just getting your Microsoft CFD coming straight from CT index. Okay, so if you do that, you now have it here. So that's the way to do it. Okay, that's the way to handle market data. That's the way to handle connecting TradingView to your CT index account. And that way, now you can trade using CT index, but planning your trades via TradingView, because the power of TradingView when it comes to analytics and so on, and that is, I haven't even mentioned the UFOs yet there, which are here on the right. The power of TradingView is superior to using WebTrader. Okay, even though WebTrader is pretty cool, but of course, obviously TradingView is specialized analytics software. Okay. Now, how can you get TradingView if you don't have TradingView? Well, it's very simple. You use a browser and you type tradewithufos.com/TradingView. Okay, tradewithufos.com/TradingView. And the moment you do that, it's going to bring you to a place where they're going to present to you their Pro Plus, and Premium plans for you to subscribe. Good news, you don't have to. You can just scroll down. Okay, I am logged in, so let me log out. Okay, here we go. So I am logged out, and because I'm logged out, so now it's giving me also the choice, try free basic. And even though it says try, it's not a trial. It's actually a lifelong free membership to have access to TradingView. It has a few limitations, such as you can only use one chart at a time. But again, that's the same that if you were to use WebTrader. But then you have all the other aspects of the power of TradingView. So your window will look like that, where you have a chart with the UFOs. On the bottom part, you have your auto client, right? And then you open your order panel where you're gonna do your trades. Instead of the way I have it here, which is I got two charts. Okay, so you can have up to 8 charts. Okay, up to 8. But that requires of a premium plan, okay, which those ones are payable. The one that is free is one chart at a time, which for most trading styles is more than enough. Okay, so you can get your TradingView. Okay, again, I'm gonna show you on the screen one last time how to do it. So you go to www.tradewithufos.com, and then you add /TradingView. Okay, and that's gonna bring you to the place where you can get your free TradingView account. The moment you got your free TradingView account, then you get into your CT index account. And if you don't have it, you just follow the instructions on the bottom part of the screen, right? tradewithufos.com/CT index. You go there, you open your account, and now that you have it, you can link it to TradingView. And then, last thing, and we begin, okay? I'm getting organized here. Notice how on the left, I'm using Auto Climate. On the right, I'm using Auto UFOs, right? Again, if you only use one chart at a time, okay? So you have the UFOs here on the top, green and red, and you have the auto climate on the bottom, right? So what are those tools designed to do? Very simple. Those tools are designed to tell you if buying or selling carries with it a statistical advantage. Okay, so should I be a buyer or should I be a seller? Okay, this is what Auto Climate answers. Auto Climate is free. Okay, Auto Climate is free, so anyone can get it. Okay, you just need to go to tradewithufos.com/apps. Okay, and then you get it. And now you can get an answer to these questions based on statistics. Okay, I will explain later how to use it. But again, this is not about being biased or doing a subjective analysis of the markets, or a trend line analysis where everybody draws the trend lines in a different place, or a moving average where everybody uses different settings for the averages. There is subjectivity built in, isn't it? Here it's all about stats. So I will explain later how to use it. It's very powerful to avoid problems, if you wish. And once you got your auto climate, so then on the top, okay, we have the UFOs, okay, which the UFOs are there to tell you that now that I know it's time to be a buyer, or now that I know it's time to be a seller. So the question is, which price should I buy at, and which price should I sell at, right? And in other words, entries and exits. So now that you know you should be a buyer, now you know you should be a seller, now you define your entries and exits, and now you are in, okay? You are in a trade. And by the way, this is something that you could just use that simplistically, okay? So auto UFOs to answer question number 2, auto climate to answer question number 1, okay? And we could enable that on TradingView for you when you go to this link, tradewithufos.com/apps. And now you have it, and now you can trade easily. You need to pick the time frames of your choice, which I'm going to demonstrate all of that in a moment. I'm going to guide you, so you will see how to do it. But also the other thing, okay, is that you could combine auto UFOs and auto climate with other techniques. Okay, for example, here, let's say you are a Fibonacci trader, and so we're having this move on the way up, right? And as the market was going up on the way up, so you have the 38% line, the 50% line, the 61% line. Well, notice that if I zoom in a little bigger, okay, notice that the 50% line, which is this one, let me draw this again, that 50% line got nothing. It's just a line. Sorry, the 38.2. The 50% line got nothing. It's just a line. But then if you look at the 61.8 line, it's lining up with a UFO perfectly. What does that mean? Well, that means higher odds for the trade to work. So maybe you are not a UFO trader, you are a FIB trader, or you trade moving averages or breakouts, or you do support and resistance, or you do, Bollinger Band mean reversions. I don't know, you name it. So whatever it is that you do, you can go ahead and combine your trading technique with the UFOs to make your methodologies to be more robust and more objective, less subjective, and less emotions involved. Okay, so with all of this said, I took a little bit of my time here today because I wanted to make sure this is well understood. Out of prior sessions, we got a few questions, and I wanted to clarify that. So with all of this clarified, we are now ready to begin. And as always, I will start from trading styles which are a bit more passive. So I want to start thinking of what if I'm an investor? And then I want to start moving into, okay, so what if I'm not an investor? What if I am a more active trader? And then what if instead of a more active trader, I am a very active intraday trader? So I'm going to go from those different trading styles. Okay, so for the investor style, I really like to rely on swaps. So I'm going to look at my list of FX swaps. Why? Because if I get into trades, let's say with a euro pound, and I go short, okay, notice here it says minus swap, like that, you cannot see, minus swap, okay? So minus means you have to short to get swaps. Again, for the ones of you not knowing what swaps are, maybe it's a good for me to come in here and look at Forex, okay? And here you can see all the markets available, right? Forex, equities, commodities, metals, ETFs, sectors, so many things. So let's say you are looking at the, oh, it's still loading, just one moment. Let's say you're looking at the euro pound. Okay, so euro GBP. So 1, 2, 1, 3. Here we go. So if you click on the drop-down menu and you go for chart 360 for the euro pound, notice that when it comes to finance charge, notice that when you short, you are being paid 14 cents for every 10,000 euro, okay, per day. And that's, of course, on leverage. For you to trade 10,000 euro, you don't need 10,000 euro. So again, this, if you calculate the return on investment of that, if you hold a trade for a month or 2 or a year, because we are talking about long-term investment, right? So those swaps pay very nicely. Now, careful, if you were to go long, you actually need to pay 77 cents. The negative sign means you have to pay. So I'm looking at shorting only, okay? And that's why I got the euro pound on my minus swap list. Okay, so again, euro pound minus swap. I would like to short this guy, but on the weekly time frame, W for weekly, notice how my climate is blue. So I will explain more about climate later. Right now, I guess it's kind of self-explanatory. The climate suggests buying carries with it statistical advantage. Blue is for buying, red is for selling. Therefore, while I would get paid swaps if I short, AutoClimate tells me it's time to be a buyer. It's not time to be a seller. So I'm going to ignore it. Okay, the Euro Kiwi suggests that being a seller makes sense. Okay, it's red, but it's a thin dot instead of a thick dot. So that means the climate has a little bit of a directional component to the downside, but the climate is not what we call confirmed. So odds are less, and therefore I'm going to skip it because we have many markets to choose from. The amount of markets tradable with CT index is huge. So there is no need to force a trade. The Euro Singapore dollar is also blue. We'll skip it. The Euro Aussie dollar is also blue. We'll skip it. The Euro Canadian dollar is also blue. We skip it. The Euro US dollar is also blue. We skip it. And the Euro Mexican peso does show a confirmed climate to the downside. So this is a trade that we may want to explore, because if I get short US dollar against Mexican peso, so I am going to get paid swaps every day. So how would I trade the US dollar against the Mexican peso? So the first thing, I'm going to use array to point at the moving average, okay, on the weekly time frame. The moving average is the black line, and I'm using that as a reference. Okay? Sorry, I just clicked erroneously. I'm using that as a reference, okay? Oh, okay, I got the market mode on. Here we go. I was doing it in the wrong place. So the blue line is more or less where the moving average is. And notice that by doing that, now I got a blue line on the right. Now the right is not a weekly time frame, it's a daily time frame. So what am I looking at on the time frame on the right? I'm looking for red UFOs, okay? Red UFOs to be used as an entry. Why? Because notice, like for example, it happened many times in the prior candles. So see, we got a red climate, okay, which started somewhere here, more or less here. So as we look at the red climate, every time the market came to the EMA, it dropped. Every time the market came to the EMA, it dropped. So if it comes to the EMA, I would want to short because I am in a red climate, so the expectation would be for the market to fall. But that is just an expectation based on what happened in the past, which may happen again. But for this to really happen, I need on-field orders, okay, which is the meaning of the acronym UFO. I need on-field orders to sell. Now, what happens on the daily time frame? I don't see on-field orders to sell. What if I load the 4-hour time frame? Do we have on-field orders? We do. So we have on-field orders right here, located between 1979 all the way to 1991. That's the place where we have on-field orders, okay? And that is lining up pretty okay with the moving average, okay? Why am I saying pretty okay? Well, because the moving average is called moving for a reason. It moves, okay? And let me adjust this properly. So the black line is 1977. So this should be, it's actually not too bad, right? Yeah, 1976, 74, that's good enough. So that's where the EMA is, but the moving average is called moving, meaning that for me to take the trade, I need the US dollar Mexican peso to come up. And when it gets to the blue line, which is the black line average, then we expect it to fall. But on that move up, guess what's going to happen to the average? It's called a moving average for a reason. It's going to move. It's going to move up. And if it moves up, then the average is going to be lining up very nicely with the red UFO. I need to take a sip of water, guys. 1 second. Sorry for that. This will happen a few more times because my throat is not too well, okay? So I apologize in advance. So anyway, in other words, that works well for us to set an entry at 1979 with a stop above 1991, okay? So we're going to focus on that, okay? We're going to be planning to short the US dollar Mexican peso with an entry located at 1979. 42.5, okay? with a stop located at 1991, 84.9, okay, 84.9, and because we want to round it up, okay, I'm just gonna go for 90, okay. That's gonna be the plan, okay. Entry short 1979.42.5, stop in case we're wrong, a little bit above the UFO right there, okay, at 1991.90, which is right above the red line, okay. So entry is here, stop is here, so the distance between those two lines is our financial risk, which, by the way, I'm going to adjust. And what I've been doing in the sessions is to always adjust it to $100 of risk, which it doesn't mean in your case it's going to be $100. In your case, maybe $10. In your case, maybe paper money. In your case, maybe $1,000. Again, starting from taking the trade or not, that's going to be your decision. Using a large size or a small size, or using real money or paper money, of course, that's your decision too. I am here to coach you, to guide you, to help you understand how trading is done, especially how do I trade myself. That's what I'm here to do. So this is not financial advice, and taking the trade, it's obviously your decision and responsibility. But again, the beauty of trading, like for example, let's say you want to risk $20 only, so you would just type 20, and now the units, the size of the trade would be adjusted for you automatically. That's one of the beauties of using TradingView, where by typing how much risk you want to take, 100, it changes the size of the trade for you automatically. So when you take the trade, you know you will not lose more than that unless you get slippage. Okay, this is where the knockout options come into place, because with the knockout options you cannot suffer slippage. Okay, it's kind of like you have your preset knockout exit points, which are invariable. There is no slippage there, so that's a great benefit. Okay, anyway, so entry, stop. What about target? Well, I'm gonna turn on the UFOs on the weekly time frame for the Mexican peso, and we got a target located there at 1805. Okay, now 1805 seems very far. Okay, and we talked about this in the past, that when a target is very far, reaching it's very difficult. The further away your target, the less likely you will get there. And notice how before we get to 1805, we got another UFO on the daily time frame at 1926, another UFO at 1966. So again, it's a little bit of a hopeful thought to expect that it's just going to keep dropping and dropping and dropping, and just keep dropping all the way to 1805. It could happen, but probably we're going to have bounces along the way, and I rather take profit a bit sooner. So what if I was to take profit at 26.23.5? What would happen if I was to do that? Well, if I was to do that, I would be shooting for a 4-to-1 trade. Okay, I am risking 100, and if I'm right, I'm going to make 426.35, and I get swaps while I'm waiting for the trade to happen. I mean, not while I'm waiting for the trade to happen. The moment I get filled, while I'm waiting to reach the target. Okay, that's when I got that's when I get the swaps. Okay, I was like lacking a word there. Okay, so anyway, so the trade makes sense, and therefore I'm just gonna go ahead and click sell. Maybe before I do it one last time, I'll give you an opportunity for a screenshot. Okay, so you can take a screenshot, you can study this, you can decide if you want to use it for your practice or not. And in the meantime, I will be checking the chat box to see if there is any question there. I don't see any question. How's it going, my friends? Type OK if all is good. And if you have questions, please do not be shy. I am going to take the trade now, and I'm just going to click sell. And the trade is in. Okay, as you can see, got the entry, the target, the stop, and the target. Okay, so it's all in place already for my trade. Okay, so trade number one of the day is in. Also, out of curiosity, if I go back to my web trader and I look at trades, notice how the US dollar Mexican peso trade is here. I did not use web trader to enter the trade. I used TradingView, but because TradingView is connected to CT index and your account is your account, so now you can see the trades in both places, in web trader, in TradingView, and also if you load the CT index mobile app, the trade is going to be there too. Okay, so that's perfect. Cool. Okay, so we had a first example of a long-term opportunity. Now I would like very quickly to mention, I'm going to change trading style in a moment, but I would like to mention our trade on the Canadian dollar Japanese yen, which is a trade that was profitable. This is a trade that we planned on the prior week when the climate was blue. Okay, and we were expecting, let me zoom in, we were expecting that on the weekly time frame, once the Canadian dollar comes to the EMA, right there, we were expecting a bounce. Okay, and it happened. Okay, and that bounce allowed us to move the stop. And if you recall, we did that together last week. And therefore we locked in a profit of, I think it was like $47 or something like that, given the fact I was risking 100. So now I went from not risking anything and minimum, worst case, I was going to make 47. And of course, if it keeps going, I will make more. But it did not keep going. It turned around and reversed very violently. But even though that was the case, no problem. We still locked in our $47 or something like that profit, and it was a happy trade. So of course, because this trade took a week or two, we collected swaps for like a week or two. So it's not like we collected that many swaps. But of course, the trade turned direction and we end up with a profit. So that's a good management. Last week, which I won't today, but last week I spent a decent amount of time talking about the importance of trade management and how trade management could really help your trading results. And this is a great example, and that's why I wanted to show you the chart of the Canadian dollar, Japanese yen, because if you had done the same type of market, the same type of trade management to the majority of the trades that we have planned since the beginning of October, when we started running CT Index live sessions, to be honest, the majority of the trades would have ended up in the green. If you did nothing, many of the trades would have been in the green for a while and then end up in the red. So it's very important when you attend those sessions live with me that you don't close your eyes and you forget about your trades, because the nature of the market is a dynamic nature. And while the climate was blue for a while, then the climate changed to red or vice versa. And when those things happen, you as a trader need to act to protect your profits, and worst case, exit the trades with a small profit, which is not ideal, but it's certainly better than exiting the trade with a full loss. Okay, our full loss is whatever you decide with the order panel, right? Earlier I was typing 100, so the most you can lose is 100, not a big deal, but at the same time, it's way better to make $47 instead of losing 100, isn't it? So if you keep applying your trend management to the majority of your trades, that should help a lot. Okay, good. So let's move now to my list of city index markets, and what I'm going to do is I'm going to start from the top with the US S&P 500 index, and I'm going to start doing some market analysis there to see if there is any trading opportunity that makes sense for us to take. Okay, now for me to do that, I would like to start now looking at a daily time frame. The reason why is because we've been pretty passive on the currency, so I don't want to be passive now. I want to get a bit more active. So instead of weekly climates, I'm going to look at daily climates. Later, I will look at 4-hour climates. Later, I will look at 1-hour climates, and I will make myself more and more and more active one step at a time. Okay, cool. Okay, so now we have the climate of the S&P, right? And what do we have here? Well, the climate is confirmed and blue, right? So being a buyer carries with it a statistical advantage. Okay, so what am I going to do? I'm just going to go ahead and enter a ray. Okay, here's the ray. The ray is showing up here on the right on the 4-hour time frame. Notice that there is a UFO above. That is not good, because as the S&P comes down to where the blue line is, we expect it to bounce. But as it's going down, what's going to happen to the moving average is going to come lower. So my line is going to be somewhere here, which is definitely not lining up with the green UFO where the buy on field orders UFO are. Okay, we don't have it. So that setup is not valid. And I'm going to give the setup one more opportunity, which is the 1-hour time frame. Let's see if with the 1-hour time frame we got something. And same story with the 1-hour time frame. The blue line is in the middle of nowhere. So I would expect for this black line average to be non-respected, like for example here was non-respected or here was non-respected. I would expect the same to happen because there are no UFOs. I would not expect this to happen. That's what I want. Price to come to the EMA and bounce, and I can capitalize on that one. But for this to happen, we need on-field orders, which we don't have In this case, the blue line is in the middle of nowhere. So no problem. We're just going to change market and check the NASDAQ US Tech 100 CFD and see if the NASDAQ gives us a better setup or is the same situation. So we're going to go ahead and align our ray with the black line. The blue line on the right is in the middle of nowhere on the 4-hour time frame. What about the 1-hour time frame? Also in the middle of nowhere. There is a UFO above but not below. So not a good setup. So let's take a look at the Dow Jones Index. Okay, the Dow Jones Index, which by the way, this market has created so many very, very good opportunities. Some of them were trades that were planned. Like for example, the prior week, you can see how we draw the line there. And so the idea was to wait for price to come and bounce. Here it bounced again perfectly, right? Here it bounced very nicely as well. Here it bounced very nicely as well. So again, very, very well behaved Mr. Dow Jones here. Okay, so where are we at now? Where we are in a different situation because the EMA has moved up, isn't it? So we are now dealing with the EMA to be located in this location, right? So in this location, we can see on the right, the blue line is also in the middle of nowhere on the 4-hour time frame. What about the 1 hour? Same story. On the 1 hour time frame, the blue line is also in the middle of nowhere. Okay, so it looks like the US securities probably they had a situation where they rallied too far too fast. Okay, and when that happens, basically it leaves a lot of people waiting for the market to retrace all the way to where those on-fielders are. And then, the people that miss the trade, they're probably going to take it now because they are probably looking at, all this price action as a support, which certainly it is. But most importantly, it's a support with on-field orders, which that we know thanks to the UFOs. And from there, we expect the bounce to happen. Okay, so no U.S. equities in that no U.S. indices in that particular time frame. The daily climates are not giving us setups which are valid for that level of activity. So I'm going to look at UK, and later, by the way, I'll drop time frames, and I'm sure we're going to find something, okay? But I'll go one step at a time. So the UK securities very well behave as well, respecting the EMA very nicely many times, okay? So that's beautiful. Having said that, look, I'm not going to be keen to plan a trade on the UK securities, and the UK index is a fantastic market to trade, but notice how a normal thing to happen is to move up in waves of 6.5 candles at a time, 6.5 days at a time in this case. And the last wave has been 16 candles nonstop. Now, could it continue? For sure. Could double. It could. But statistically speaking, it's not likely because 6.5 is a 1 standard deviation, which another way to say standard deviation is a normal thing to happen. So if 16 is more than 6.5, then 16 is not a normal thing to happen. And therefore, if you are already dealing with a market which is not behaving as normal, so then you are a bit of gambling on what the outcome is you expect it to be, instead of relying on something that is behaving like statistics suggest it should, where then the outcome should be a bit more predictable, isn't it? So nice one if you were in this trade from a long time ago, but entering now is what I would call hopeful, because you expect the craziness, the statistical craziness to remain, okay? And statistics are there for a reason. With the DAX, even more exaggerated. Statistics suggest 595, and currently we got 23 candles moving in that direction. Look at this amazing move for the German index. Absolutely amazing, but buying now, I mean, you could not say this is buying low, isn't it? So not a good idea. Okay, Singapore index. Okay, we're gonna look at that one. That one just started a new climate. Okay, Singapore index just started a new climate, so that one could be a good bet. Okay, for us to plan on a trade around the EMA, which is located here. Okay, where the black line is, more or less here. And of course, we do need to find a setup that is acceptable, which is a setup with the green UFOs, which we don't have on the 4-hour time frame. And if I look at the 1-hour time frame, we don't have it here. Okay, so notice what's happening with all the equities. Okay, and by the way, I knew that was the case because, of course, I do market analysis every day for my own trades. But is that strange, or is that a normal thing to happen? Well, it's normal because in the end, equities are equities, And whatever happens in the US has a great impact in other places in the world, in Europe, in Asia. And therefore, equity markets, while some have relative strength or weakness compared to others, they tend to behave more or less in tandem. And we can see that here with the climates being very much stretched. The only one that seems to be behaving differently is the Singapore index. But unfortunately, we don't have a UFO to plan a trade. Okay, so what are we going to do? Well, I'm not going to give up on those. Okay, but what I'm going to do is I'm going to drop from daily climates. I'm going to drop to 4-hour climates, and then I'm going to look at 1 hour and 15 minutes to make my trading more active. Okay, so I'm going to start again with the S&P. Okay, with the S&P, I'm going to pass. Okay, well, actually, not necessarily. Okay, let me see that. So here's the EMA at 68 something. Okay, so here's the EMA. If I look at the 1 hour time frame, I got nothing. If I look at the 15-minute time frame, no, I got nothing. Okay, so with the S&P around the blue line, we have nothing. What about the Nasdaq? So with the Nasdaq, to be honest, I like this setup better. So let's take a look. So here is the EMA. 15-minute time frame got nothing. The 1 hour time frame got a green UFO, but is lower. So nothing. What about the Dow Jones? So with the Dow Jones, we got a blue climate. Okay. Oh, and guess what? We are inside of a green UFO right now in the 1 hour time frame. And if we look at the 15-minute time frame, we are also inside of a green UFO. Okay, we are also inside of a green UFO. So looking good since the 1 hour time frame gives me the opportunity to take the trade now because I am inside the green UFO. I'm just gonna apply on the trade now. Okay, but we have a trade here with the Dow Jones index. Okay, let me find a target first. 3380. Oh, yeah, we're gonna have to pass. That's bad news. 3380 is that guy. So if this is my entry price, this is my target, and below the green line is going to be my stop, it means I'm risking all of this to make that tiny bit. That's not good. I want the opposite. I want to risk less in order to make more. I don't want to risk more in order to make less. So while this trade may work very well, and I would say it's very likely going to work, I'm going to pass. Okay. What about the UK? So the UK is in a non-confirmed climate. Okay, non-confirmed climate. So we're going to leave it alone. What about the German index DAX? Let's take a look at this guy. So if I place my blue line here, we are located right here. What about the 15-minute time frame? Do we have anything? No green UFOs. Okay? So again, today it's one of those days where it seems that we are just getting no for an answer. But again, it's good because we are stacking odds in our favor. Probably the fact that we're getting many no's means that probably this very extended blue climate is about to change to red. And the moment it changes to red, then we can start planning on shorting. Okay, but of course, this is real time. And of course, I cannot chart the future because the future hasn't happened yet. Okay, so what I could do though is I could drop my time frames to find an opportunity in a lower time frame. So if I look at the S&P, this is non-confirmed. So I'm going to look at the Nasdaq, which is confirmed to the downside. Okay, so the Nasdaq is giving us an opportunity to short on the 1 hour time frame. So this will be a short intraday trade. The EMA to be located around 45, something like that, which is the blue line. Okay, on a 15-minute time frame, I got a UFO. Okay, on a 5-minute time frame, I don't. There is a UFO a bit higher, but not there. But on the 15, I do. Okay, so we do have a trade. We are now in a price point where shorting makes a lot of sense. So we are just going to do it. The only thing I need to find out now is a target. And the target here is very nice. Okay, the target is far away down. So take a look. Okay, you see patience pay, my friends. So we have an opportunity to short now. So I want to short market. That means short now. My take profit is going to be 11,495.5. And my stop is going to be above the red UFO, which is 11,7 76.3. You know what? I'm just going to make it 777. So if I do that, and I want to risk, let's say, $100, okay? So this is a 7.3 to 1, okay? And this for intraday trading, I would say no way, right? It's the target is too far. So what if I drop to 15 minutes? 11,480. It's even further away. What if I look at 4 hours? Even further away, okay? Wow. What if I look at 5 minutes? I need a target which is closer. So if I look at 11,726, 726, so 40. I'm gonna go for the green one, 11,685.8. Okay, this is a 11,685.8. Okay, so this is a 1.5 to 1. Okay, which it's worse than before, but to be honest, for an intraday trade in and out, especially given the fact that in just a few hours from now the market will open. So I would see that as an okay location for the target. So I'm just going to go for it. I'm just going to take the trade, risking $100, stop 777, take profit 685.8. So here's the trade, and I just got filled. So I am in the trade. And yeah. And that's it. So we have the trade with the Nasdaq, okay, which is running, and later I will come back to see what's going on, okay. But that's it. We're in, okay. So this trade is valid based on the set of rules I have been presenting to you guys. So everybody, please, before I continue with other markets, give me a little bit of feedback of how are things going. Any question? We have 15 minutes to go, so hopefully the Nasdaq will start moving, and we'll have an opportunity to do some trade management while we are still live. Let me know if there are any questions, and if there are no questions, just type OK, so I know all is good. Cool. Thank you for that, guys. Very good. Okay. So next markets. So we've been looking at all the equity indices, which are the blue color markets I got here on the top. I would like to go ahead and take a look at crude oil and see what crude oil has to offer. We're going to start with the daily time frame for crude oil. Let's take a look at crude oil in the daily time frame and see what we have. So we have an up market, which is confirmed, but take a look at, you guys see this tiny gray line under the blue dot. So that tiny gray line means that the climate is likely going to reverse. Okay, so very erratic market climate. Crude oil is falling hard while it's a blue climate, and the technology is picking up on this, and that's why we have a potential change of climate to be confirmed tomorrow. So I guess that the only way probably to take advantage of crude oil would be to trade it in a lower time frame and see if we have an opportunity. So here on the 1 hour time frame, we have a down climate which is confirmed. Okay, it's confirmed, and I'm gonna go ahead and draw a reference line, 87.85. Okay, right there. So this is our reference line, which is falling very nicely inside this red UFO. Oh wow, it's a shame that we didn't do that 30 minutes ago. That's 2 candles before, because 30 minutes ago we came to the UFO, give it a kiss, and we could be in this trade now making a profit on the way down. But anyway, the UFO is still there on the screen. So taking the trade is still valid in case the market was to come back up to meet our entry at 87.69.7. Okay, so now before I accept this trade with the 1 hour time frame, I want to check 5 minutes too, see what we have there. And the 5 minute time frame, look at that. I mean, that's just like 30 minutes ago we could have got it here, okay, lining up perfectly with that UFO with the blue line. Yeah, unfortunately we were not planning this trade earlier, so we missed it. So I'm just gonna go back to my 15-minute setup and see where the target would be, and see if we have a trade that makes sense or not. So 86.16, yeah, that makes sense, because look, we are in a situation where down climates tend to last 5.08 candles, which is 1 hour each in this case. So that's 5 hours. We're winning this climate for 2 hours, so we still have 3 hours to go. So can we reach the green UFO with 1, 2, 3 more candles. Can we? Yes, indeed. It's not like it's that far. So this could be a valid target, okay? And if we base the entry on that UFO, that may be a valid trade for us, okay? So the only problem is that the trade already started, so it may never come back. But if it does, at 8769.7, which is the red UFO on the right, that could be a very valid entry. If we get the entry and we get to 8616.6, this is indeed a valid target. And in case we're wrong, so we need to set a stop above the red UFO, which is 8832.7, and I'm just going to make it 83.5, something like that. Okay. So again, my habit of risking 100. Here we go. And this is a 2.4 to 1 trade. So we are risking 63.8 in order to make. Oh, what did I do there? Here we go. We are risking 63.8 in order to make 153.10. Yeah, we are right at the limit, right? That's the problem. Okay, so this UFO is a bit wide, so in order to avoid the problem, let me run this up to like 70, something like that. So I make it a bit wider, and that way the probability of not getting the fill is less. Okay, so just reviewing the trade plan on the screen. Everything is making sense. I'm reviewing the values. Yes, yes, yes. So let's place the trade with crude oil. And here we go. Entry, stop, and the target located below here at 86.16. Okay. So again, we need the price of crude oil to come back up to get into the trade. Or if you were doing the same thing I just did, 30 minutes, 45 minutes ago, you would be in the trade right now, and it would be time to do some trade management. Talking about trade management, let's go back to our trade with the Dow, with the Nasdaq, and see what's happening. Okay, so the Nasdaq started falling. The trade is making $3 of profit, so it's very little. Of course, it's no time to do anything yet. But yeah, it's nice to see that some profits started to be made. So here's what I would do now. What I would recommend, recommend from the point of view that this is what I do. Of course, you should have your own trading plan. Again, remember, none of this is financial advice. But from my own experience, what I appreciate very much on doing is to use a lower time frame chart. And as I am in this trade and the market is going down, every 5 minutes, I'm going to get updates here on the chart. And anytime, sorry guys, anytime I may end up getting a red UFO show up on the screen here anywhere. Sorry, guys. So what would you do if that red UFO shows up? Well, if that red UFO shows up, what I would do is to take my stop point, which is currently up here, where I'm risking $98. And, again, let's say, again, there is a red UFO that showed up here. So I would now move my stop above the new UFO. And then, maybe now, worst case, you make $5, right? Something like that. Now, of course, I am depending on those UFOs to form. And one active way on how to do that is to lower the time frame. Remember, we entered using a 15-minute. So for trade management purposes, a smart way to do it would be to use a lower time frame, like 5 minutes, where you can start moving your stop sooner to protect the profits that the trade is making sooner. Okay, but so far no UFO yet. So hey, nothing to do. Now you may say, Jose, what if I use a 2-minute time frame? Can I do it? Of course. And there may be a UFO. Let's see. Well, there is a UFO there. Okay, but that UFO was there already before we entered the trade. What if I use a 1-minute time frame? Do we have UFOs? And if there are, technology will pick it up. No UFOs yet. So nothing has been created. Now, would I recommend to use the 1-minute time frame? No. Why? Because again, you are planning on a trade based on a 1-hour climate. If every 1 minute something happens, you were to change the location for your stop. Basically, that in a way that means that you are not committed to your plan, and you gotta find a balance there. Okay, so that's why I was looking at the 5-minute time frame because again, it's more or less representative. You have 12 times 5 minutes in 1 hour, and it has some level of relevance. Okay, Those are rules that I have in my trading plan. Again, you should do some backtest and some exercise yourself on the screen to find out if you would like to do your trade management on the 5 or the 10, or maybe use the 8, or maybe use the 15. Or again, all of this depends on how active or passive you want to be as a trader, which has a lot to do with our own trading personalities. Okay, so now you know how I do it myself. I'll come back to this to see before the session ends in 6 minutes time, in case a UFO showed up, so we'll be able to do this particular action. Okay, so far the trade is making $21 for us. Thank you very much, but we are not in a position to trail stop yet. So patience, discipline, and risk management. Okay, cool. Okay, so what else? Currencies. Okay, so I'm gonna look at the majors. Okay, we got 5 minutes to go, so I guess I will have time to do that. I'm gonna go back to a 4-hour climate, and I'm gonna be looking at some of the majors. Okay, so the Australian dollar on the 4-hour, I'm gonna combine that with the 1 hour, 4 hours and 1 hour. So the Australian dollar has an EMA right here, but there is no green UFO, so we're gonna pass. The euro starts showing there a little bit of a bottom gray line right under. You see that? Right under, right there. Okay, so we're gonna pass because this is the a sign that suggests a potential change of climate. So we're gonna pass. The pound is in an up climate, so if we were to draw a line here where the EMA is that lining up with a UFO? No. Okay, so we're gonna pass. The Kiwi, potential change of climate, the US dollar, Canadian dollar. We are right there where the EMA is, but I mean, I don't need to draw a line, I'll do it. But we are at the EMA, so if there was a UFO, you would see it. But just to keep the same process I did before, so you can see here's the blue line, but the UFO is above, so I'm gonna pass. Euro Swiss franc, amazing moves on the Euro Swiss franc. Okay, so here's where the line would be 95.01, somewhere here. Okay, and no UFO. And the US dollar yen, this is the last currency major I'm going to check, which is showing us also the little bit of a gray line in the bottom part, right, which tells us about a potential change of climate. Okay, so those are not valid candidates based on the 4-hour climates. Okay, but what about if I use a 1-hour climate or a daily climate? What about that? Well, then maybe yes. Okay, the US dollar, Japanese yen may give us an opportunity to trade using 143.62 as the EMA. Somewhere here. Okay, check the 4-hour time frame on the right. So daily on the left, 4-hour on the right. So no UFO. A little bit of a teaser this market today. What about the US dollar? What about the US dollar Swiss franc? So I'm just gonna get a line there. Okay, what do we have? Well, this is above the UFO instead of below, so no good. Almost. What about the US dollar CAD? So the US dollar CAD has a UFO there. I want to skip it if you don't mind, not only because of lack of time, because we have a limited time now, but also because that UFO is so large, okay, so large that obviously you have a great financial risk taking this trade. The larger the UFO, the larger the risk, right? What about the New Zealand Kiwi? Okay, so New Zealand Kiwi got see. I'm not sure why it doesn't show the blue line. Okay, so let me put it here. Okay, so the blue line is below the UFO, so no good. The pound, we got the line right there, below the UFO, no good. The euro, So with the euro on the daily time frame, oh, I just hit the wrong key combination on my keyboard. Sorry for that. Okay, the euro is also, the line is below the UFO, and the Aussie, I believe, probably the same is going to happen. The Aussie has the line below the UFO. Now, this, if you wish, problem is not a problem because it's just a matter of patience. You wait one day because it's a daily time frame on the left, and what's going to happen in 1 day time? The black line is going to bump up because it's a moving average. The moment the black line bumps up, next thing you know, your blue line is now higher, and therefore is inside the UFO, and now it's okay for you to take the trade. Is that making sense? So I will let this as homework for you. And before we go, I'm just going to take one last look at the 5-minute time frame of the Nasdaq to see if a red UFO has formed. No red UFO has formed yet. Okay, no red UFO has formed yet. So it's no time to trail the stop. Okay, no time to do it. Anyway, just for you to see how it's done. Let's pretend there was a UFO there. So you would just click and hold, drag this thing down right there, right? And now you can see it says +5. So if I release it and I modify, okay, now if the Nasdaq goes up, worst case, I'm gonna make $5. I cannot lose on this trade anymore. Okay, it's not ideal if it comes, but at the same time, I would like it that it comes. That's it. It just came. So you can see I got stopped out here on the left. Okay, but I got stopped out for a profit. Okay, so this is what you would want to do. Okay, if you were in that situation where the UFO has been created and now you are trailing the stop on the way down. Now, if you had a UFO, the probability of being stopped out is very low. In this case, we didn't have a UFO, and therefore I've been stopped out, and now it may keep falling because the climate was down, isn't it? But anyway, my friends, it's been a pleasure spending this hour with you as every Monday. Here I'm back to showing you the City Index QR codes for you to go take a look at the knockout options promotions, as well as the City Index rewards and benefits on their website. On the bottom part of the screen as well, you have the link where if you would like to go and learn more on CFD trading, including the processes, the steps for account opening and everything else, you can go and take a look at that link, tradewithufos.com/City Index, and find out more. And anything, you can also see my email address on the screen. So if you need anything, feel free to email me. You have trading questions, you have any sort of need when it comes to developing yourself as a trader, for sure, we are happy to help and ready to help. So count on us, do not be shy, and see you either on those email messages or see you next Monday in the session. Take care, everybody. Bye-bye.